Hey everybody, here is your downside video for July week 4 in case you need something to come back to and reference for guidance if we get into further selling next week. I'm not going to be here, I'm not going to be tweeting, but I'm leaving you with this. Hopefully it's going to give you a guide through the carnage if that is what we are going to get next week. Anyway, after the close on Friday, there was another Fed interview, this time with the Fed member Rosengren, and he was very hawkish. He was saying, in essence, the bottom line was he doesn't really see the need for a rate cut at all. So market did not like that, and we sold off even lower on the futures than where we had closed on Friday. So Friday, we held a higher low against Thursday. We held above the 20-day simple moving average, but after the close, we did sell down a bit. And if that's going to be resolved, if we're going to see a little further downside on Sunday and we have a gap down open on Monday, the first line of defense is going to be here at a test of the July low, which is also our Q3 low. If this holds and we reverse back up, then you've got to get through, you got to go back to the other video and watch that, and hopefully it'll help guide you through what's going to happen. But what I want to do with this one is just sort of tell you the truth about what the further downside could be from here, because we do have a very reliable pivot now with an all-time high. We have spent about a week moving away from that all-time high. We've broken down and closed below a key simple moving average that always helps signal to us the beginning of a correction, and that's the 10-day. We've held above the 20-day, but if we come in and we gap down open below the 20-day, that of course is going to be an overhead line of resistance for us, and if we can't get back above it, we're going to sell off lower. The first point that we would maybe hold would be the July and the Q3 low. And when we look at our targets list, which I've now filled in the downside targets now, because we do have what I think is a reliable pivot that we can use at 30.1780. 2% off of that high would get us back down to 29.57. So a simple 2% correction would get us right down here to about 29.57, give or take a few extra points. That would be a hold of the July low and the Q3 low, and maybe that's all it takes. Maybe we're going to just reverse from there. That rhymes with our 80 handle rule as well, because here on Friday, we took another look above 3,000. We came down, we closed below 29.80. Maybe if we break down through 29.60 to 65, then we need to hold above 29.50, reverse, and then work our way back up. So there's a lot of rules pointing to, the idea that maybe this is the worst that it's going to be. It's just a look down here to the July, to test the July low and reverse off of that. That would be our most benign thing that would happen. Okay, so if that's the case, great. Everything's done. Go back to the roadmap, go back to the other video, and work your way up from there. But if there's further downside, at 3%, we go down about another 30 points. Because each percent down now is about 30 points, because 1% of 1780 is like 30.178 points. So anyway, 29.27 would be our next level down in terms of a percentage takeoff from this all-time high. At 29.27, that would get us right down in here into this gap that has been left open from the area between the 27th and the 28th of June. So we would fill this gap and we would come down and we would work on this next gap here, and that would be a 3% clip off of the all-time high. At 4% down, we would be getting down to 28.97. So we would see a look below the 2900 level. And at that point, that would also be a test of the 50-day simple moving average. Okay, so that's where, and we would be sort of looking into a gigantic gap here. And sometimes when we get into these kind of gaps, these really large gaps, sometimes we take a few days to fill them. Sometimes we just look into them, reverse, and go up. And if we don't have enough buyers on the upside, then we come back later. It could be, a couple of days. It could be a couple of weeks later, but we come down and fill that gap at another point. We don't always fill these gaps all in one day. So anyway, that's where 4% would get you. And then at 5%, once we get below 4%, Then we start getting into the 80 handle rule again, because once we break 2900, we're looking at 2880. At 2880, you can see that we would be getting into an edge level here that is left over for us from October of 2018, and our 100-day simple moving average is in there. And below that 2880 level, we have 2873. 2873 is the halfway back point now from our all-time high, getting all the way back to that June sell-off low at 2728. And I've kind of stopped the roadmap here because I doubt that we'll get, if we, at worst, our carnage over the course of the next week, I wouldn't believe would be any worse than testing all the way down to the 100-day and this 2873 level. This would be a 50% retracement of this whole rally that we've made since the open, that last low that we made on the first trading day of June, and it ended up being our low for the quarter for Q2. If we test, a full 50% of that, that would be the 100-day simple moving average would be this 2873 level. You can see there's quite a traffic jam coming in here at the 2873 level. Basically from 2873 on down to about 2867. Okay, let's take a look at the calendar for a second as well, because this plays an important role in what to expect next week. Okay, now here we've traded through all this stuff. We have housing data on Monday, PMI, manufacturing as well as services PMI from a different survey source, but that's going to hit us on Tuesday, and that needs to not be hot. If that is really hot, if that is really positive, the market's not going to like it. We have durable goods on Wednesday. We have the Mueller testimony on Wednesday, and then we have Boeing and Cat earnings as well on Wednesday before the bell, and Facebook after hours. So I think this would be a big culmination day. If we sell off a little bit and bounce and then don't get the things that we want on Wednesday out of all these sources, maybe Wednesday is going to be that day that we really flush lower, or maybe we sell off all the way to Wednesday and the market is just relieved that all of these things are out of the way, that Mueller's out of the way. We've seen Boeing and Cat, so we know how severe at this point the trade war has been damaging us. We got Facebook after hours. Maybe if that's positive, that will turn the market around. And then on Thursday, we have Amazon and Google reporting, and I can't help but think that there'll be some kind of a short covering rally that will happen on Thursday, just so that people are, out of their shorts and ready for whatever Amazon and Google bring. And then on Friday is that GDP report. That was the line at the end of the Rosen that really, I think, is going to build momentum over the course of the week, and people are going to be looking towards this GDP report. And I would hate to see us have the same sort of thing happen on Thursday, Friday that happened just this past week, where we rally up on Thursday, we get Amazon and Google after hours, and we get higher highs on futures on Thursday, and then we come in on Friday morning, we get a really hot GDP report, and people just sell the living daylights out of that, and we have another, bearish meltdown for the day on Friday. So remember this 2-day pattern here when we get to the end of this coming week. Okay, I hope that this helped you out and didn't confuse you too much with me going back and forth between the target list and the roadmap. But I use my roadmap because my roadmap is basically, the detailed notes of everything that I've seen and everything that's going on. And that target list just sort of is a different way of looking at it, because not everybody judges the market the same way that I do. A lot of managers and so forth judge it with simple things like, choosing a key pivot and taking percentages off of that. So I'd like to see where those are and see how they compare to the things that I've already taken notes on the roadmap, and so that I have maybe some supporting evidence of why we might get our way back to certain levels on here. Anyway, hope this helped you out. Have a great week, and I will see you guys next Sunday night, the 28th. Good luck and good trading.